Tata Motors, Mahindra, Kia, MG. When all these brands are talked about in India, in the same breath we talk about one other major brand as well. Maruti. But in the last many years, whenever the name Maruti comes up, what everyone says is, "Arey yaar, Maruti mat khareed lo." The safety is really bad. But the fun fact, Maruti's sales numbers are just going up and up. Yes, Tata Motors, Mahindra, other Indian brands are also coming up, but Maruti is also growing as well. So in this video, let's look at the Indian automotive industry at its current state. Let's try to understand why Maruti is still dominating, and let's look at other peer companies, especially listed companies like Tata and Mahindra as well. And if you're a Maruti Suzuki investor, make sure you watch till the end of the video to try and understand if the parent company Suzuki is trying to trick Indian shareholders by its secret tactic. This is Ajay Ajith. Welcome to Market Feed. So let's start with a quick history lesson. Maruti Udyog Limited was founded in 1981 by the Government of India and Suzuki Motor Corp as a minor shareholder. And the company was a brainchild of Sanjay Gandhi, who was Indira Gandhi's son, who was supposedly a huge automobile enthusiast. So over the course of many years, they brought multiple iconic cars to India, and now they are known to be a brand which Indians love and adore. And in 2003, it went IPO. The company went public, and the Indian government sold a lot of its shares. And in 2007, the government completely sold off its stake to Suzuki Motor Corp and exited the business. The name was changed from Maruti Udyog Limited to Maruti Suzuki India Limited. And that marked the end of the government's involvement in India's automotive industry. Still, even with the Japanese company Suzuki owning more than 56% stake in the company, it's funny to see a lot of people still continuing to think that it is an Indian brand. And some people still think that Maruti is owned by the government of India. And from its IPO days, the brand is hugely successful. And being a consumer brand that back in 2003 also, a lot of Indians knew and adored, it saw a lot of stock market participation. So it is known to be one of the major companies that brought back trust in the Indian stock market after the Harshad Mehta scam, after the 2000 crash and everything. And today, Maruti has a market share of 42% in the Indian passenger vehicle market. And Hyundai and Tata, who are the next in the list, they have just 14 and 13% each. So think about the gap there. And for perspective, in the last financial year, the company sold 14 lakh cars, while Hyundai sold just 4.8 lakh cars and Tata Motors sold just 3.7 lakh. And the last 10 years sales data of Maruti and its competitors also show that Maruti is the only brand that is steadily growing at an amazing pace. Even the brands like Tata Motors, they had a dip in between. They're just coming back. They're just at a level where they should have been a long time ago. So whenever you see headlines like Tata Motors posted amazing sales numbers, do always think of the slight giant competitor beside them, and the fact that if this company is taking away sales from Maruti or if it's taking away sales from other competitors like Hyundai. So let's get into the fact, why is Maruti so successful? How is the gap between the first place automotive seller and the others so huge? So the only point to be discussed here is Maruti Suzuki has always given Indians what they want. So first, people wanted economical pricing. So you can see that Maruti Suzuki is the only brand which is surviving in the economic car segment of India, which is the 3 to 5 lakh car segment. But as soon as the market was not demanding it in the premium segment, it was no longer a concern for Maruti. If you're looking at the slightly more premium cars, maybe at the 10 to 15 lakh, you can see that Maruti's pricing is at par with its competitors. There is nothing like a 2 lakh rupee discount on every car that Maruti is selling at the premium range. So what did Indians want next? Indians wanted mileage, and which brand delivered that perfectly? Maruti delivered mileage as we all know it. They started producing lightweight cars, compromising safety, and then mileage started to increase, and yes, sales also started to increase. But after a few years, or in the last many years, the sentiment has changed again. People want safety. So Maruti Suzuki, with its all new initiatives, they're bringing out safety as well. So this is a classic case of a brand which is always giving customers what they want just at the right time. And that is the secret of their success. And with this, they are able to stay as a brand which is loved by all the people of India while also keeping their shareholders happy with maximizing profits. But hey, there has been other discussion points as well. Why is Maruti not innovating? Why are EVs not yet out? And why is the sales dropping in financial year 21 just after COVID when Tata Motors almost doubled their sales? So the company is saying that over the last 2 financial years, nearly 4.5 lakh units have not been sold or they could not be produced because of the global chip shortage which it is still facing. So what can you understand here? Maybe a smaller player like a Tata or even a Mahindra, their entire volume itself is low, right? So their problems are also different. But being a mass market seller who's selling huge units, they are more likely to be affected by such scenarios. And when people say that Maruti might be late to the EV segment, just look at the CNG sales chart of the company. The company has sold a lot of CNG cars and the industry there is growing as well. And now in India, when you're looking at the longer term, it's not a trendy thing to do, but the more sensible and economical factor is that you buying a CNG car instead of an electric vehicle. So let's discuss the future of the company here in the next segment. What all we need to know to understand if the company might be heading in the right direction or not. So the first thing that we have to talk about here is the shareholders' confidence in the company. The share price is nearing its all-time high and it's ready for a multi-year breakout. So do have a watch out for that. So why is the shareholder confidence going up? A lot of new models have been introduced which are being well received in the Indian market, like the Fronx, the Jimny, and even the Grand Vitara in the premium segment as well. So earlier they were just focused on the economy segment, but now they're trying to transition into the premium segment as well with their partnerships with Toyota. So shareholders don't want to know just the current sales numbers and everything. They want to discuss or know about the future as well. So let's look at that. The company has nearly 40,000 crores lying around in FDs and debt mutual funds, which can be liquidated anytime they want for an emergency scenario or for deploying in research and development. Think about it, 40,000 crores. Yes, that is the amount. Now, if you're talking about the future, the company has already announced they'll be launching an electric vehicle by the end of 2025. And this will be directly competing with companies like Tata and Mahindra then. But here is where you should know the one risk for investors, which we discussed at the beginning of the video. And while I was looking deeper into the topic to understand why the company was succeeding, why are they better or selling more cars than their competitors, I was struck by this one fact: SMG. Suzuki Motor Gujarat Private Limited, which is a 100% subsidiary of Japan Suzuki. It is not owned and operated by the public Indian company, which is Maruti Suzuki. So what is happening here? This company, SMG, is setting up a lot of plants in India, right? Manufacturing plants, and a lot of Maruti Suzuki's operations are being transferred into this SMG. But hey, Maruti has come out and said that it got the shareholders' approval for this deal, and its chairman is also very happy as well. Because what they're saying is, this plant or this SMG group, whatever cars that they manufacture in this plant, they will be sold to Maruti Suzuki India Limited for no profit or no loss. So suppose they make a car here for a cost of 4 lakh rupees, they'll be selling this car to Maruti Suzuki for the exact price. And there has been a detailed report by the IIAS group which talks about how it is very unethical to have a 100% owned subsidiary and a publicly listed company in this competing in the same exact space. And who is to know that this deal of a no profit, no loss might not change in the future? And think about who loses here. And these carved out structures are made in such a way that Maruti Suzuki India Limited loses and Suzuki Motor Corp in Japan wins. And I feel that the Japanese company is trying to slowly take away value from the Indian company and its Indian shareholders. If you're looking at the future plans of Maruti as well, it is slightly concerning because whatever investment is happening in the EV segment, it is happening directly from Japan through Suzuki. It is not happening for the Indian company. At least the intellectual property is not being owned by Maruti Suzuki. Money is being pumped in from the Japanese company. Whatever investments and intellectual property going into the future, The Japanese parent company is trying to make sure that Maruti does not benefit for this, and it is definitely not a good look for the shareholders. 40,000 crores in FDs and debt mutual funds. Still, the funding is coming directly from Japan through Suzuki. Just think about it and let me know what you think of it in the comments down below. So let's get into the last segment, which is my opinion or my take. I will not be investing in Maruti Suzuki just because of this one reason, where the shareholders' interests in India are not being respected. It is still a growing company. It may continue to sell a lot of cars in India and continue to be the market leader, but that does not necessarily translate to shareholder wealth in the longer term. And this is why I'll be rooting for homegrown brands like Tata Motors and Mahindra, who are even selling better numbers than Hyundai these days. These companies need to win to make sure that the Indian automotive industry stays true to its roots. These companies still have a lot to improve, but I believe they're going in the right direction. So get subscribed, because another video is coming soon which will talk about Tata Motors as a company and its future. So that's it for this video, guys. Leave a like and subscribe if you like the content here, and make sure you watch our previous video which talks about why mutual fund investment might not be a good idea at all. So yes, this is Ajay Ajith signing off. See you all again. Bye bye.